Good morning, traders. Today is Monday, the 14th of June. My name is Neville Hornsey, market analyst with YouTrading, and today I'm joined by
Joel Frank, also market analyst for YouTrading.
How are you doing?
I'm good, mate. I'm good. Starting with new week. Weather's still looking beautiful.
Yep.
Can't complain.
Cool.
Yeah. How are you getting on, mate?
Yeah, we're good. Obviously,
Nice.
yeah, summer months, hot weather, low volume markets. So
yeah, summer markets. Literally, markets are on their summer holiday, aren't they? So if you look at G10FX, most of the pairs have been in the same range. Yeah. Literally since this time last month.
Yeah, exactly. So in terms of what is going to happen this week, which will move the markets, what is your rundown for this week that potentially could give us something to go on?
I mean, starting with the key things that are going to move, like stocks, bonds, and FX, I think the key focus is got to be, of course, the FOMC rate decision on Wednesday. Okay. Most people in the market, most market participants are expecting the Fed to kind of maintain its dovish line and not to indicate their shift towards tapering QE. There might be some talk of, they talk about talking about tapering, but there's not going to be talk about tapering. You know what I mean? I think they're still at that early stage, which should come across as dovish, I think, and probably wouldn't be enough to shake us up out of these recent ranges.
No, and we're still hovering around the $90 on this chart. So we just rolled into the new contract on the dollar futures. So let's see if this contract can actually get away from the $90. At the moment, just going from left to right, not going up or down. So
I mean, it's been at that range you can see on the chart, like, what is it, 89.60 to like 90.60. We've been stuck in that for a month. So, I mean, if we do get a hawkish surprise from the Fed on Wednesday, which I doubt, but if we did, then I think we'd go above 91.
Yeah. Just because the dollar index is kind of highly weighted with the euro dollar. I'm just seeing like a little flag type pattern. It's a controlled correction from this like rising up trend, if you like. The black dots were the ECB, and again, the last couple of ECBs have been bearish. So for the euro, but the dollar itself hasn't seemed to have benefited much from this weakening euro. So it's a shame.
Yeah, true. I don't know, maybe this is a trend to observe, but like you say, it's just markets are really sleepy at the moment. So it's almost like they just don't want to trade off of anything.
All right, what's next then? What we're going to look at next?
I mean, sticking with the US side of things, like we got retail sales as well out on, I believe, Tuesday. But retail sales have kind of lost their remember a couple of months ago, they were a really, really important data point in terms of like shift in market sentiment. But now, not so much. Because we had that big spurt in spending after the stimulus checks were handed out at the start of the year. And now consumers in the US are, as expected, just bringing back that spending back to normal levels. So we're going to see a slight decline. I think probably PPI is going to be more interesting. US PPI, like you were saying earlier, is expected to fall a little bit as those base effects from last year are ironed out. It's going to be, I mean, inflation is still one of the key narratives in the market. Like, is inflation going to be high? Are we going back to deflation? So, that's probably going to be more important.
Just talking of inflation, like in the sort of run down from previous all-time highs on the NASDAQ, because yields were like rising and these sort of sensitive stocks, if you like, the sort of tech stocks were sort of getting hammered. Inflation sort of story now is like obviously gone because we are back to all-time highs on the NASDAQ. So just thought I'd mention that. It's weird how the sort of sentiment and like narrative sort of just fits whatever's happening. Well,
the market is very much telling us right now that it's not concerned about like long-term high inflation, because like it's not just the NASDAQ that's at all-time highs. Also, if you look at bond yields, they fell a lot last week. And inflation expectations are down from recent peaks. So very much, I think we've seen the peak of inflation concerns for now. But maybe they could be reignited at the end of summer.
Yeah, and gold obviously is supposed to be the inflation hedge, and gold miners and gold have been, doing this, up, correct type of pattern. So, once this correction finishes, I'm expecting, gold miners to go up and gold to go to 2000. And I guess if inflation is going to be around 2%, because that's kind of the target, isn't it, for the Fed, then the gold should just slowly appreciate. It'd be interesting to see if we actually get like a big run up, a big sort of spike higher at any point for any reason. But at the moment, I don't see it. I guess a dollar collapse maybe, but other than that, nothing really. What about other commodities, commodity pairs? You got anything?
Yeah, I mean, so we've got some interesting data out of Australia and New Zealand this week. Like, we got Aussie jobs data on what day are these?
Thursday.
Yes, Thursday. Yeah. Aussie jobs data, and we've also got New Zealand GDP on Thursday as well. So both of those data points could give some independent impetus for like Aussie dollar and Kiwi dollar. Yeah. Although broadly speaking, like those currency pairs will track risk appetite and commodity prices. Yeah. But that's just something to keep an eye on Thursday.
And I guess like today's a relatively quiet day. Friday's a quiet day. So if the trading's going to be centered around FOMC, then I guess it's going to be like one of those slow weeks really, and definitely we get like a little spike of interest around an FOMC or rate decision.
And also I should have mentioned, whilst we're talking about the commodity currencies, inflation data out on Wednesday in Canada, which could give dollar CAD a bit of impetus as well. But like you say, it's going to be dominated by the Fed, really, isn't it?
Yeah, dollar CAD. I'm still thinking the dollar rises against the CAD just a little bit more. Well, I say a little bit more, like 100, 200 pips. But I've got a big target I want to sort of see get tested before a continuation to the downside. But
I mean, it does look overdue a bit of a correction, doesn't it? Like it had amazing outperformance like a couple of months ago, and it never really corrected.
No. So, I mean, I don't see how the dollar's going to massively appreciate at the moment. That sort of story's gone. I think oil still stays at these highs. Canada's going to do quite well out of that. So, nice to get a sort of breakdown, retest, and then continuation to the downside, just to make sure, say that I'm quite good at technical analysis more than anything else. But because at the moment,
like it, man. I like it a lot.
At the moment, we just swept these lows from like 2017, but it's hard to see how this is going to retrace all the way back up to previous highs. So.
Yeah. Oh, I mean, in the medium term, I cannot see something like that happening unless commodities collapse and the risk appetite collapses and the dollar just like goes on an absolute amazing run. But I don't expect that to happen. No,
and it looks like oil's going to, like, this is a weekly chart and this is the fourth week of continuous green. So like today started green for the fourth week. There's no structure as such to act as resistance until, maybe a swoop
that 2018 high.
Yeah.
So that's the target. That is where everyone's trying to get to for the Once we hit that target, which I'm sure Tide will, there could be a bit of a pullback, potentially some profit taking. But
All right. Well, that's kind of cool. We'll keep an eye on all that over the week. And,
nice.
I guess catch up with you next week.
Nice, mate. Yeah. Speak next week.
All right. Ciao.